Okay, good afternoon, everyone. I'm Melissa Byers, Executive Director of the St. Petersburg Bar Association. Again, this is a large group. We're so happy to have everybody here today. On behalf of the St. Petersburg Bar leadership, I want to extend our condolences to all of those facing challenges as a result of the recent hurricanes. Quite honestly, I was thinking about it today. It's hard to imagine that our community has experienced two major hurricanes within the past 26 days. And I also wanted to share from a wellness perspective, it can be debilitating to navigate the fear, the unknown challenges, and the multitude of decisions, all while your sleep and your daily routines are completely disrupted. The intensity of the stress, the resulting high cortisol levels can cause anxiety, short-term memory loss, headaches, backaches, irritability, among many other symptoms. So, we consider ourselves to be the wellness bar. So I need to definitely say to everyone, look at this as a marathon. Find one small way every day to focus on your self-care, and whether that's just drinking enough water, or taking a 15-minute walk, or playing with your child, just simply taking a multivitamin. Think about yourself throughout this process. I also want to make a few bar announcements. November 1st, we will be hosting St. Petersburg Mayor Welch at our membership luncheon. November 15th, we will be hosting our Bencham Bar at Stetson College of Law. I also want to share, for those of you who are not familiar with the St. Pete Bar, that we are the only bar in the state that offers all events and CLEs free of charge to its members. So I hope you consider joining the bar if you're not currently a member. Please keep an eye on the bar calendar for all of the upcoming CLEs. We host 30 to 50 per year, and we also have another one coming up called Raise, Rebuild, or Run. And it will include our speaker, Amy Boggs, who's with us today. She will be on that panel discussion as well. Also proud to share that we're celebrating our 100th anniversary, May 15th, 2025 at the Vinoy Grand Ballroom. With that, I want to introduce today's speaker. I feel that our speaker, quite honestly, needs no introduction other than simply Amy Boggs is a rock star. Amy has served as part of the bar leadership team, and I can personally attest that her knowledge, fairness, her professionalism, her honesty are only superseded by her passion. Her bio that was sent to everyone starts out by she is a seasoned litigation attorney who specializes in first and third party property insurance and bad faith claims. But she also shares that she is passionate. She is a zealous advocate for her clients. So I want to encourage everyone to please read her full bio that was sent with the CLE certificate. I also want to just share that we will have a Q&A session at the end of today's CLE. If you wouldn't mind, please hold your questions or jot them down on a separate piece of paper and then put them in the chat, but hold those questions until the end to add them to the chat, because again, this is a very large group. So we want to make sure we don't miss anyone's questions. So again, with that, I want to thank Amy, part of our leadership. I consider her a friend, and I can't thank her enough for her time today and giving this valuable information to everyone. Amy, I'm going to turn it over to you.
Thank you, Melissa, and thank you for everyone being here. I think the hurricanes that have devastated our community are really going to bring this community together. I foresee two things coming from this. One, and I've worked on hurricane claims throughout the state up in Mexico Beach that was, leveled basically. And what I see after a hurricane is, one, the community comes together in a way that you really can't imagine, and we will be bonded by these events going forward in a really positive way. That's the good thing that will come of this. The second thing that I foresee, having done this for 24 years as a litigator in first party claims, the second thing I see, unfortunately, is that people will have problems getting their claims paid. It is unfortunate, but it is the truth of the matter. And as practitioners in this affected area, we are all going to have clients, neighbors, family members, et cetera, asking us, I don't know about anybody else, but I'm kind of like the attorney of the family, and people are like, can you look at this lease? Can you do this, et cetera? And here you're dealing with a very complicated insurance product. And in the wake of Helene and then Milton, you're dealing with several complicated insurance products. So today is really supposed to be a high level overview of property insurance and what you can expect and some of the nomenclature. And then I am going to focus a fair part of this on flood claims, Flood claims are very, very, very tricky. They're unlike anything you deal with in your practice. And there are some deadlines that can really get you in trouble if you're not aware of those. So let's start off with your insurance policies. A lot of folks think, well, hey, I've got a hurricane coverage, and so when I have a hurricane damage, I'm going to alert my insurance company and they'll pay for my hurricane claim. There really is no such thing as hurricane coverage. What most folks have is a regular insurance policy that covers wind, and we have a flood policy that would cover flood. Also, some people have a homeowner's policy that is X wind, meaning it doesn't have wind coverage. And then they have a separate wind only policy. And the reasons for that have to do with underwriting. They have to do with whether it's a commercial entity or a residential property that's being insured. But for a variety of reasons, the policies that come into play here are your flood policy, your homeowner's policy if you have wind. If you don't have wind on that, then it's your wind only policy. And of course, your auto policy may come into play as well. If your car was flooded or what have you, that's going to be under that policy. So the difference between wind and flood coverage is basically flood covers water damage for rising water. So that's where you have storm surge, you have overflowing rivers and lakes and things of that nature. That's flood coverage. Anything that's coming from the ground up, street flooding. Wind covers water damage to the property, but it's only water damage that enters the structure from
Okay.
above.
No,
So
from who? FEMA? Oh,
somebody's not on mute.
good.
Somebody's not on mute.
Awesome.
We can
Can
hear
we
your
ask everyone to
conversation.
please mute?
Thank you. Okay, so your wind policy covers water damage as well, but it's water damage that comes from above. So you have water that enters the property through a breach caused by wind. Classic example, we saw this at the trop. The roof is off. Now you have water inside of the building. That isn't covered by your flood policy. That's covered by your wind policy. The water that rises, flood, that comes in from the top is from wind or covered by your wind policy. One of the issues that you'll see is the wind carriers want you to be able to trace the water damage, the rainwater that got into the property, back to a breach in the structure caused by wind. That's all fine and good in the example where you have a ripped off roof or windows that broke in or something like that. It becomes a more difficult scenario where you have water that enters through windows that are compromised or through sliders or cracks in the structure. So you will be asked to show that the rainwater got in through breaches caused by the wind. Keep in mind, and I don't want to get too down the field with burden of proof and litigating these claims, but keep in mind it's the carrier's obligation actually to establish that the water damage, the rainwater that got in, the wet drywall that's above the flood line, it's the carrier's obligation to prove that that was not brought in by a breach caused by wind. So you're not obligated to prove that, but as a practical matter, you're going to want to be able to establish a connection between the water damage in the home and the wind. A lot of folks don't realize that they have problems. They don't realize that they've got shingles off of their roof. Most people are not going on their roofs. You really need to be cognizant of that. What happens with hurricane claims, and they become then late reported, is that you have the roof compromised. The homeowner doesn't realize it. They're like, thank God we didn't get any water in. Our roof didn't peel off. And then months later, they notice that in the back bedroom that they don't use that often, all of a sudden they've got water coming in and they've got a collapsed closet ceiling or something along that line. And that is because water gets in through the roof. The roof system is a complex system, and it takes a while for the water to actually manifest itself in damage inside of the home. So one of the first things I would say, if your property was hit by flood or wind, or your client's was, you have to have a thorough evaluation of the damage. Um, Let me talk quickly about your coverages. This is again just into reading policies. What does the policy cover for us? So I'm going to share my screen here and pull up this. This is okay, this is a typical homeowner's policy that has wind. Your coverages are dwelling, that's the house, other structures, that's anything that is away from the home, separated by a clear space. So a fence, for example, that's attached to the home or to the structure could be considered under the dwelling coverage, or it could be considered other structures. You don't need to get into that debate unless you're running out of coverage in one or the other location. If you have a pool house, detached garage, that's all other structures. Personal property is contents. Included with the personal property would be anything that is not attached to the realty. This is where you would think about like a purchase contract in real estate. So anything that's not attached to the realty in a manner that removing it would cause damage. So I'm saying that because your refrigerator, for example, would be personal property. The stove or that's built in would not be considered personal property. Typically, in adjusting these claims, carriers are going to put everything in the kitchen under dwelling. You don't have to worry about that unless you're coming to a coverage limit. I'm over limit on my dwelling. I'm now going to move my appliances from dwelling to personal property. Vice versa. If you're over limit on your personal property and you've got your stove and your refrigerator and things like that in there, you can advocate to move them into your dwelling. But these are your coverages. These are your limits. Loss of use is for additional living expenses, the expenses incurred as a result of being displaced from the storm. Now, loss of use has to be incurred. That means you have to enter into a contract or actually sign up with a VRBO or incur the expense of the hotel, and that's reimbursable once it's incurred. When I'm dealing with a client who is going to be out for a long period of time and they need to maybe enter into a 6-month lease, if they can even find that, typically I'll send that to the carrier and say, my client wants to enter into this lease and legally obligate themselves. We need the first and last month's rent and deposit, and we need you to approve this before my client actually signs it. So although my client hasn't incurred the cost, they're about to, we just want to get approval on that before that happens. All right, this policy is probably an 80-page policy. I've included the declaration page only. Just a quick tip, your contract with the carrier involves the declaration page and all forms and endorsements that are listed on the form schedule, and then any laws that apply. So if the carrier says, well, there's an exclusion about this, or there's an exclusion about that, if it's not included on one of these forms, and believe it or not, I have had this happen before, where the carrier was relying on an exclusion that was in a form that was not part of the contract. So the first thing you need to do when you ask for a full copy of your policy from your agent is make sure you get all those forms and endorsements. The renewal declaration isn't enough, and it does not tell the whole story of what you have. Final thing to note on your declaration page, again, which is the outline of your contract, is that your hurricane deductible is going to be one of many. So your normal deductible for this particular client is $1,000. That's pretty typical, $1,000, $2,000, $2,500. The hurricane deductible, however, is usually much larger. It can be 1%, 2%, 5%. I think even on the surplus lines carriers, they can go up to 10%. And it's not a percentage of the claim, meaning it's not 2% of your $50,000 claim. It's 2% of your coverage A limit. Coverage A, again, is your dwelling. So here, the policyholder has a $7,800 deductible, and those deductibles can be high. It's not abnormal to get a letter from the carrier saying your damage is under deductible. And it's important to note on that, by the way, they are extending coverage. They've admitted that you've had a covered peril damage to the property. There is just a dispute about the amount. And that's an important distinction between that and a denied claim where the carrier is saying you had no wind damage at all. That policy declaration was for just a regular homeowner's policy that included wind. This is a declaration page for a flood policy. So flood policies, and I have one from the Hartford and I have one here from Allstate. Looking at this, most of us would think, well, I'm insured by a private insurer, Allstate, or the Hartford for my flood claim. That's not accurate. So the federal government has allowed private carriers or private insurance companies to write FEMA-backed policies. So this is a FEMA-backed policy. How do I know that? First of all, 99.5% of the flood policies are FEMA-backed policies written through private companies. But I can tell that because it says NFIP, National Flood Insurance Policy, and then a policy number. Flood policies, and if we hadn't been hit by Helene, where there was a significant flooding event, I would not spend much time on the flood claims with you folks because it's very detailed and very difficult. But I feel compelled to do that because I believe we are going to have a lot of flood claims and as well as wind from Milton. So you'll notice that the flood policy, let me see if I can move this down, has very minimal coverage. They have building and contents. That's it. There will be no additional living expenses. There is no coverage for detached structures. If you have a shed or a fence or something like that that was damaged by flood, a dock, those things are not covered, even if you have coverage for those under your homeowner's policy. A dock is a very good example. The folks out at the beach are dealing with that. I thought my dock was covered. Well, it appeared that it was covered because it's covered under your homeowners, but it's not covered because that's not a coverage available under the flood policy. Note that on the flood policy, the limit is $250,000. That is the maximum that a residential property can get. Now, commercial structures and commercial residential structures can get a higher amount, but not much higher. Flood policies are not written to scale. They're not actuarially sound. It is literally just a number that they provide. So you can have $1 million building or home that's only covered for $250,000. Contents, again, are much lower than you would anticipate them to be, probably for the size of the house. Finally, there's an extra coverage allowed in this policy, and it's called increased cost of construction. It's not identified on the deck page, but it is built into all FEMA policies. And that increased cost of construction relates to coverage to comply with ordinance and law. Local ordinances, we're going to talk about this a little bit more when we get into the should we rebuild or not rebuild situation. But big picture, building codes are developed by local municipalities. The beaches all have their own. St. Pete has its own, etc. But the federal government has one, I would call it a building code just to keep apples to apples. But basically it says that if you, let me get back to unsharing my screen. If you if your property is damaged more than 50% of the value of the structure, then you have to build the property up on pilings if you're in a flood zone. And so we're dealing with a lot of folks, especially on the beaches, who had little cottages and homes that are one level. And they're now going to be forced to raise those properties up if they're damaged more than 50% of the value of the building. And if they do that, if they trigger that code compliance, they have $30,000 under their flood policy to do that with. If anybody is dealing with that situation, you probably already know that the cost to raise up a property, really doing nothing else, is about $200,000 to $300,000. So the $30,000 available doesn't come close to actually covering that cost, but it is available. It must be incurred, and there are time limits for incurring that as well. And you have to submit documentation. Those are your coverages. I will add that if it's a commercial enterprise, you're dealing with a restaurant or anything like that, the business interruption is kind of the counterpart to additional living expenses. It's a coverage for the business during the time period that they were interrupted. And there's a formula usually in these policies that says this is how we're going to determine profit and so forth. If you get into a complicated business interruption situation, I would be happy for, I'll say this at the outset. I'm a local attorney. I'm on Central Avenue. I'm happy to talk to my husband and I practice together. We're happy to talk to anybody. Feel free to call, pick our brain, ask us some of these questions as you try to navigate these things on your own. Business interruption is often manipulated by the carriers. So they're going to look at, for example, your seasonal restaurant is going to be out of business now all through next season. And they're going to say, well, we want to take the last 2 months or your last month of sales and use that and extrapolate that out. And so you have to look at, are they comparing apples to apples? You often have to get an accountant involved. But business interruption can be very tricky. It's the counterpart of additional living expenses, which is basically the cost to protect you if you are out of your home or out of your business. All right. All of these policies provide post-loss obligations. All right. So the first one is going to be, and I will put, I'm going to put a little cheat sheet up that we're also going to provide to everybody. You have to give prompt notice of the loss. So in Florida, for the regular policies, for the homeowners policies or the wind policies, you have to provide reasonable notice. So what is reasonable? Well, you didn't realize you had a leak in your roof, but you didn't check it out either, and you make that claim 6 months later. That's going to be a problem. You can have a defense. You have to establish that there's no prejudice to the carrier as a result of the delay. More importantly, and I guess I should share my screen on this, sorry. More importantly, there is now a statutory requirement that you report within 12 months after the date of the loss. That's probably not that difficult when you have a hurricane claim, right? But that deadline doesn't protect you from not reporting it within a reasonable time. So that is the outside of the deadline. No matter what your timing is, it's got to be reasonable. A supplemental claim has to be made within 18 months after the loss. Well, that sounds pretty simple. Gosh, in 18 months, I surely should know how much it costs to repair my home. That's not always the case, especially if you're dealing with delays in construction, which is what we are going to see here, delays at the permitting office, even getting your work started, if you can find somebody, and you're going to have material increases and things like that. But at the end of the day, you have to have your entire claim identified within 18 months after the loss. Just a quick, talk about additional living expenses and business interruption. It's impossible to know how long you're going to be out of your house or how long you're going to be out of your business. And so it's difficult to do that within 18 months. With a admitted carrier and with a wind policy or homeowners policy, you can work around these things. You can send a letter saying, we anticipate being out for another 6 months or 8 months. We're complying with our supplemental claim deadline, but we're going to give you some anticipated damages that may or may not come to fruition. And you can craft around that. In the flood policies, and we'll get to that in a second, there is no room at all for not complying fully with the deadlines. It is a draconian cutoff, no waiver, no estoppel, nothing along that line. All right. A second obligation after the loss is to show you your damaged property. You've got to let the adjuster get out there. There's a whole set of timelines built into the statute 627-70131 that outline the carrier's obligation to timely inspect the property, timely respond to communications, timely render a coverage determination. Those things are important, but I didn't put those in here because I don't think that's what we need to focus on today. But if you get into that situation where you feel like there's a claim delay, where you feel like you're not being taken seriously, you can look at that statute and see what they're supposed to be doing and remind them. There's also a bad faith component under your typical wind policy. And again, that's kind of down the road, but certainly something that you should be aware of, that the carrier has a contractual obligation and they have a set of good faith obligations as well, codified into statute. The next thing you have to do is mitigate your damages, put a tarp on the roof, do what you can to the extent that you can get a remediation company out to cut out up to your flood line. That's great. But you have an obligation to mitigate the damage. Finally, you have an obligation to submit a proof of loss if requested. All right. Typically, the policy is going to say 60 days after the request. State farm policies typically say 60 days after the date of loss. And you have to be aware of that. So there's a section in the policy that's called post-loss obligations. I would look at that and make sure you comply with all of those and find out what your obligation is for the proof of loss. When the carrier sends correspondence, make sure you read all of it. Often they will tuck in there a little sentence saying, oh, also we want a proof of loss. And that triggers the 60 days. And unless you truly read all of the correspondence and realized they were asking for that, you can miss that deadline. And then that gets, buried. And if you're looking at a client that's coming to you, make sure you get all of the correspondence. Often they think, well, that's just a quick letter. That doesn't matter. That's not the payment letter. That's not the letter that they sent with the check. But buried in that letter could be a request for a proof of loss. And failure to do it is a really big problem. All right. Deadlines can be extended by the company. So if I have a client come to me and the 60 days has expired, I will write to the carrier and say, we've been retained on this. It's come to my attention you asked for a proof of loss 4 months ago. We apologize for the delay. May we have an extension? And if they say no, I ask them to explain how they're prejudiced by our failure to do that. So the standard on non-compliance or partial compliance is whether or not there has been prejudice on the part of the carrier. The districts are split about who's got to show the prejudice. Does the carrier have to show that they were prejudiced, or does the insured have to show that the carrier was not prejudiced? And those two are very different things. But essentially, by asking, you can extend these deadlines. Very different in flood. There can be no extension from anybody. So it's important to know, especially again, if you're looking at a case that's come to you, what has happened, what duties after loss have been complied with, what still needs to be done. All right, statute of limitations on a wind policy is just regular breach of contract, 5 years from the date of the breach. The date of the breach, of course, would be the date that they first either deny the claim or refuse to provide full payment for the damages. I FEMA flood claims. If you have a private flood carrier, follow the guidelines for the wind policy. It all applies. If you have a FEMA-backed policy, your claim must be, again, reported within a reasonable time. That's up for debate. What is a reasonable time? For the most part, people know that their property has been flooded within a few weeks. Here's where it gets very tricky. And I've learned this the hard way. These deadlines, I can't say it enough, are not extendable even by the adjuster. So if the adjuster says we don't need a proof of loss, hey, it's no problem. I'm still adjusting the loss. Don't worry about the 1-year statute of limitations. Even if the carrier itself writes to you and says, we will extend the proof of loss deadline, those things cannot be extended, right? And your reliance on that will not be a defense to failing to meet these deadlines. All right, proof of loss, typically 60 days, but it is extended usually to a year, but they do that in pieces. So FEMA has a website, fema.gov. They usually announce these things through a circular or through a news bulletin. So I typically will go on the news bulletin and it will tell me that they've extended it. Often, again, these get extended for a year, but they do it in pieces. So right now, the carriers have, or FEMA, excuse me, has extended for Helene and Milton to 120 days. So the deadline to do a proof of loss, and I'm sorry, I've been using the term proof of loss. I should probably explain what that is. A proof of loss is a form that the carrier provides to you on request that outlines very basic information about the claim. Date of the claim, the peril, your best estimate of what your damages are, ownership of the home, whether anything has changed since the last policy. So it's a pretty quick, or last policy renewal. So it's a pretty quick form to fill out, and it's got to be signed and notarized. It's a sworn statement by the insured. Just interesting to note, in the regular claims, in wind claims, the courts have said that a proof of loss submitted where it wasn't attested to does not satisfy that obligation. So just get it attested to. It's a pretty simple matter. You don't want to give the carrier anything to balk at the end of the day. All right. Proof of loss in FEMA claims is a little different. FEMA may require the policyholder to sign a proof of loss for the initial payments they made. So when a claim is being adjusted, the carrier is going to come out. FEMA is going to say, well, we think your damage is $67,000 and it's $65,000 after deductible. We're sending you a check. They may also want the insured to sign a proof of loss for distribution of those funds or for release of those funds. They can require you to do that, but I would reserve the right to make a claim for a little more money, right? You don't know that this is going to be it. So in wind claims and regular homeowners claims, you typically do your proof of loss once and you do everything. The proof of loss in the FEMA claims can be done. You can do multiple of those, but you must do one for the disputed amounts on the claim by these deadlines. And so what do I mean by that? Let me just get off of share here. That you have to understand what your damage claim is and submit it by this deadline. So let's walk through an adjustment. The carrier gives you an estimate that says $67,000 and they're paying you $65,000. You're looking at your house, or your client is, and they're like, I had a roofer come out. That's going to be $40,000 alone, and the mitigation company was $20,000. All this money's gone. This is not even enough money to do anything with. They must act quickly to get their own estimate done. you have a policyholder who's not represented by counsel, I would suggest to them that they go ahead and start contacting roofers, flooring folks, general contractors, and they get a good set of bids and proposals for the work that needs to be done on their house. They also likely should get their house looked at by an engineer. Often engineering issues aren't detected on first glance. Oh, the house looks great. Yes, but underneath you've lost some support and so on and so forth. So the bottom line on that is that you have to present what you think your claim is by the proof of loss deadline, regardless of whether you've signed other proofs. If you don't, you waive the right to seek those additional funds. If you are representing a client who's got a claim, you should really get a good expert contractor on board who will do an estimate. Estimating is typically done through what we call Xactimate, and that is a universally accepted pricing calculator. They go by your area and the date the price list changes and is updated often, and it includes line item after line item. So it doesn't just say, we're going to paint this room for $500. It says, remove light switches, remove fan, and replace that, taping, painting. And it's all built into this software. And it's great because you can see apples to apples. Well, what are they calling for in this room? And what is my adjuster calling for? What does my estimate say versus their estimate? But if you're counseling someone who's working on their own on this, the only way to combat FEMA's adjustment of the claim really is to get real life contractors who are going to give them bids and estimates and submit those. Again, if you miss the proof of loss deadline, you've got a real problem. In the flood claims, the statute of limitations is another problem. And it's a very, very serious issue, as we all know statute of limitations are. The statute of limitations on a flood claim is 1 year from the date of first denial of part or all of the claim. That sounds pretty simple. And you would expect that there's a denial letter that's sent out, even if it's a partial, right? So it says, hi, we've considered your submission. We're denying full coverage for the flooring. We don't think that was damaged in flood. And that would set the date for the statute of limitations, which is 1 year. Unfortunately, that's not the type of thing that you get. So what the carriers will do, and again, carriers are adjusting this, FEMA is backing it, is they will often put a tagline in a very early letter that says, by the way, we noticed your roof was damaged. We're denying coverage for that because that wasn't flood. And even that statement has been interpreted to be a denial of part of the claim. And those letters can be sent at any point. So and again, this is by trial and error. We have had these things come up where we got a client and we're involved in their claim and they're like, well, we first denied this in this letter that we sent out 3 weeks after the claim was made, before there was even really a dispute about things. So you must get all of the correspondence and you must read it fully. If I'm getting close to the statute of limitations, I'm not taking a flood claim. I might advise the client from the side, but it is too easy to fall into a malpractice situation. You really don't know all that's out there, and you can only get it from FEMA. I'll say, I want all of the correspondence, every letter you've sent, every email, and they're not quick about it. So if you are evaluating a claim while this statute runs, that's a problem. And you're evaluating it on only the documents the client has, which might not be everything. So be careful about that. I'm going to go back to share screen. Geez, that's not what I wanted to do at all. Hold on. Sorry, guys. I'm not as technically proficient as some. Okay. Your options when you get an adjustment on a flood claim are to appeal, appraise, or file suit. All right. The deadlines for appealing and appraising are 60 days and 20 days. Oh, I want to say one more thing about the statute of limitations. If I didn't, and the proof of loss deadlines, if I didn't already concern you enough about those deadlines can run while the insurance company is still adjusting the loss. So there's a lot of case law out there where the policyholder is like, listen, I was still waiting on the carrier's estimate before I did the proof of loss. And that doesn't matter. And there are cases where the carrier didn't tell the policyholder that a proof was due, and that didn't matter either. So be very, very careful that you're not thinking, well, they're not going to raise that as an issue because they were still adjusting the loss themselves. They were still figuring it out. It really doesn't matter. All right. So the options when you disagree with what the carrier has sent you are appeal, appraise, file suit. Right. Appeal is a 60-day time period. And what you're doing there is you're telling FEMA to look over what the carrier did on the claim. My experience is FEMA pretty much says, well, we agree with the insurance company. So it's not a formal process. It's a letter saying I appeal, and you send in your estimates, and FEMA takes a while and responds. And while that appeal time is running, they can take 4 months. I've had them take 4 or 5 months before. And it just doesn't usually get you anywhere. And especially if you're working for a client who wants some action on their claim, it's not really a great way to go. You can appraise the claim. So appraisal is this unique process in first-party insurance where both parties identify somebody who is going to help them with their claim. And the appraisers go through, it's almost like an arbitration, go through and they decide what they think the loss is, and they try to come to an agreement. And if they can agree, that's great. There's an appraisal award that identifies the damage. And in doing so, they're looking at causation. One guy's saying, well, I think that was wind damage. The other guy's saying, I don't think it was. And they're allowed to make those decisions in that. If they can't agree, an umpire is appointed and the umpire makes the call, and that's the damage award. It's a pretty simple process. In flood claims, they will not allow causation in appraisals. So an appraisal under FEMA is basically you're going in to appraise only the things that they agree are damaged and only for the scope that they agree the repair needs to be done. When I say scope, I'm saying this. We all agree that there's water damage on this wall. And so there's going to have to be some repair there. Scope says we're going to cut the wall up 2 feet. FEMA might say that. The policyholder and the contractor might say you really have to cut it up 4 feet because there's mold and some other issues there. And that's scope. What is the difference between those two for the repair? We all agree that it's flood damaged. Disagreements about flood damage are things like we don't agree that your porch was ripped off by flood. We think that was because it was a pre-existing defective porch that was put on. We don't cover the what they call scrubbing or erosion of dirt around the property. And we think that your structure moved, not because water was acting on it, storm surge, but because there was erosion in the pilings that were supporting it. Those are the types of coverage issues or causation issues that a normal appraisal would be able to handle. FEMA just won't do it and won't allow you to do it. So in my storied experience with this, appealing or appraising a flood claim is really just not worth it. You're not going to get anywhere. All right, so that leaves us with filing suit. All right. By the way, you can't do appraisal and appeal at the same time. You can do both, but you can't do them at the same time. So you can do them consecutively. All right, a quick word about dealing with flood claims, and the third option, which is filing suit. It is a very, very difficult proposition. And I know that I'm sounding extremely negative about the flood claims, but I do have some what I think is good advice about handling them. First of all, litigating a flood claim requires that you're in federal court. That's not a big deal. And it's a bench trial. Again, okay, we can handle that. We've all done a bench trial before. But there is no interest and no fees, and your costs are minimal. So you're in federal court. So if you try to do a proposal for settlement to fee shift, that doesn't work. You can only shift costs, and under the federal guidelines, it's really not that much, even all of your costs. And so all of those things would be okay if you were operating in a normal business environment where the other side was doing a risk analysis and looking at the dollars of going to trial. That's not the case with FEMA. So I have tried a case all the way to verdict in our favor. We got, I think it was like $120,000 verdict, great from the judge. We wound up working for about $15 an hour, and the costs were excessive because they wouldn't concede to anything. So we had to fly experts to trial. Everybody had to testify even about issues that weren't at issue. So it was a very costly process. In that, I learned from the FEMA attorneys basically that they will try a case over $10,000. They just typically don't settle these cases. They're not doing a cost benefit analysis. They know that there's no detriment to them in going to trial, and they don't, care if they win or lose. It's not a reputational thing for either the attorneys or the organization. So for my calculus, I will work on these cases for clients if they're of a certain amount, because again, if you have a $50,000 dispute, you're going to spend at least 30. Plan on going full to trial. And now what's left? So the guiding post for me is trying to get, and I am handling some flood claims at the inception right now for folks who don't want to deal with it. That's fine. Is I am doing everything I can to get a great adjustment up front with the knowledge that we will not be able to press this. So I had some out-of-state attorneys that had a claim, and they wanted me to take it over. It was their personal claim. They had letters threatening, Florida statutes and timeliness and bad faith and interest and all of that. None of that applies. Your tools to move the other side just don't apply there in litigation. So my stance and what I'm trying to do, my strategy is trying to get a very good adjustment up front. And what that means is that I am getting qualified experts to give full estimates. I'm trying to have successive meetings with the adjusters to talk through these things and hope that my presence in the case from the outset will create a more favorable adjustment to the loss. Because it's going to break your heart to have folks come to you with a $30,000 dispute, which is a lot of money for most people, right? That's a lot of money. That's a lot of money for all of us. And have to say to them, listen, if we take this case, we're going to probably have to try it. And you're going to wind up with like $5,000 in your pocket, even if I took no fee. It will break your heart. So try to get on board early so you have time to work within the statute of limitations. You have time to consider. Maybe they will do an appraisal that will include some things that you want it to include. All right, I wanted to talk until about 10 minutes till and then give 40 minutes for questions. And I'm running a little over, but I want to mention a few things. The roles of certain people, again, most of you don't practice in this area. What is an independent adjuster, a public adjuster, and an agent, and what role do they have? Most insurance companies are adjusting their losses through independent adjusters. That means they're field adjusters. They're called independent adjusters and they're licensed that way. They go out, they look at the property and they do an estimate, like I said, on Xactimate. The insured's policyholders have public adjusters that work for them. You may only be licensed as either an independent or a public. You can't be both. And so public adjusters work for the insureds. They do estimates and they negotiate the claim on behalf of the insureds. They typically charge, well, they're limited to charging in a hurricane situation 10%. Anything over that would be unconscionable, and they're not if it's against the law. So they would charge 10% of the recovery. They serve a valuable role. Anybody thinking about doing some of this, it's difficult to get out and meet adjusters on site and deal with estimating and things like that. So public adjusters serve a vital role. However, if the claim has been denied, and believe it or not, we've got some folks up in Perry where Helene came through and they've got nothing left but a slab. That's all they have left. And the wind carriers, clearly it was flood and wind, wind carriers are denying the claims, saying, sorry, this was destroyed from flood only. So if you have a denied claim, that's not going, a public adjuster can't go anywhere with that for you. That's got to be sent to an attorney and dealt with. And honestly, you really should not dabble in this area. I'm again here to pick you can pick my brain, ask me about things, but when it comes to litigating this stuff, you really should not dabble in it. There are a lot of statutes and there have been a lot of changes in the statute. So you have to understand what statute year we're running under, et cetera, et cetera. All right, I want to talk quickly about contractors, and this is just again a cautionary tale for all of us. What I've seen in hurricane ravaged areas is that first you have the fight with the insurance companies, and then you have issues with the contractors. You have these folks that roll into town, they say, listen, let us just go ahead and do this work for you and we'll deal with the insurance company. Assigning benefits is no longer allowed. These contractors are no longer allowed to do that, but they will do what's called a direction to pay, where they have the homeowner say, okay, you go ahead and do my remediation work and I direct the insurance company to pay you. The problem comes in, especially in the flood context where the coverages are already so low, that the remediation contractors don't give a proposal and a price for their work. And we have seen time and again that they gouge. So they come in and they're doing, $100,000 in remediation, eating away half of the client's, money that they've got to rebuild. And if the client had $1 million of coverage, who cares if the remediation company charged $100,000? The insurance company will have to deal with that, et cetera. But it becomes a problem when they eat into your recovery. Likewise, rebuild contractors, make sure they're getting somebody good. These folks come out and they go belly up, and people have, sign over their insurance proceeds to these folks. And then they're in litigation again for several years trying to get some of that back. And they wind up in the state's construction fund, getting pennies on the dollar. And it's just a triple whammy: the storm, then the insurance company, then the bad contractor. So I have a lot of other things I could say. The carrier has rights to invoke the option to repair themselves. They can undertake that. If you are dealing with, assignment of benefits. Oh, there are also things called co-insurance, where you have to insure your property to a certain amount. There's also valued policy law. The property is a total loss. And under regular policies, you have increased cost of compliance as well. So you've got to be aware of what the ordinance and law situation is if your client is going to rebuild or you're going to rebuild. So with that, I will take some questions.
Thank you, Amy. Fantastic job. We appreciate you so much. I do want to back up. Someone had earlier asked the benefit being made payable to and forwarded to the mortgage company. How is the benefit paid to me?
Okay, great question. Mortgage companies are going to be included on the check for the building. damage. And so what happens? Your mortgage company has a vested interest in making sure that the collateral that's securing the note is restored to its pre-loss condition. What they will do, every mortgage company has its own little program, but you contact the loss draft department, loss draft, and they will tell you what their program is. They essentially put that money into an escrow account for you, and they dole it out like a construction loan. So you come to them, you say, okay, here's the adjuster's estimate. Here's my contractor's, roof contract that calls for a third distribution at the beginning or something like that. And they release the funds and they will allow you to do the repairs. They're not entitled to take that money and apply it to your loan. They will dole it out to you, and they, depending on the amount, they will want to look over repairs. Sometimes they send inspectors out to look and make sure you're 50% done or something like that. But that's generally the way that works.
Yes. On a flood claim, if there was flood damage in Helene and flood damage in Milton, how do you handle if essentially it's the same damage, with the exception of how much drywall, has to be cut? Do you submit two claims? One claim for the last storm. How would FEMA or the adjuster distinguish damage between the two storms and apply deductibles?
So that's a great question. I would try to, if your adjuster came out between the first and the second, that's the best situation. So Helene hit, your adjuster came out and they documented the damage from the first. I would make a second claim if you have more damage. You are going to be charged a second deductible on that. However, it will cover any additional damage that you have. All right. Wind carriers don't charge two successive deductibles for hurricane. Just by the way, FEMA does, but those deductibles are usually a lot smaller. You may want to look at what is the scope of the repair. So again, my little example of you have a flood line at 2 feet and the remediation contractor says, well, we've got to cut out at 3 feet. If you're already getting the drywall repaired at 3 feet and Milton caused an additional 6 inches or something like that, it doesn't matter. I would not make a claim if Milton already damaged property. You already had wet drywall. It now got more wet, maybe even fell away. I've had my drywall in my cottages is falling away. That's already being replaced. So that's the way I would deal with that. I don't know if I answered that well enough, but yeah, you got to be kind of strategic about whether you want to pay 2 deductibles or not. Technically, you can report both.
How long should an owner wait before starting permitting to raise the home and rebuild as an elevated structure? Does it matter if there is both flooding and a fire on the timing to begin the permitting, demolition, and new construction?
That's a very involved question.
Yeah.
So you brought up an interesting thing, which is where you have flood and fire. And we've had that where there are a lot of folks who had fires as a result of this. The fire claim should be made under your homeowner's policy. And by the way, that's not the storm deductible, that's the other perils deductible. I have heard that some of the carriers are trying to say in those fires, well, the fire was really started because of the hurricane. It's supposed to be just the regular all perils deductible. Don't let them get away with that. So as far as permitting and rebuilding, we are doing the second seminar. There's a very complicated calculus about whether you have to rebuild on pilings, whether you have to bring your entire property up to code. I would say get started sooner rather than later. What they're looking at essentially is the cost to repair versus the value of the structure. And it's called a substantial damage determination. Coupled with that is a substantial repair or renovation analysis. And in St. Pete Beaches, it goes back 5 years. So it's not just this damage right now, it's the last 5 years. So if you are doing work that exceeds 50% of the value of your structure, and remember, it's the value of just the dwelling, not the whole parcel, then you're going to be required to bring your entire structure up to code. That means hurricane impact windows, rewiring the whole place, maybe lifting it up on pilings. And so this is an analysis that you want to get a good handle on and decide what you want to do. So if I don't want to meet that 50% threshold, for example, I can get my own appraiser and I can argue that the value is much higher and this doesn't meet 50%. Conversely, if I want to take this opportunity to rebuild on pilings, I can argue the other way. And just something to be aware of when you're doing that is the amount and the look back. Also, I want to say one more thing about the FEMA and raising up. And I'm mentioning this because we had Idalia last year. If the property has been flooded more than twice in 10 years, the FEMA 50% is dropped to 25%. So when I say the FEMA 50%, I mean FEMA's rule that says that if you're in a flood zone and your property's damaged more than 50%, you have to raise this property onto pilings. That's dropped to 25% if you were flooded in the last 10 years at that structure.
If you're flooded twice in the past 10 years.
Yeah. Yes. And one more thing on the last question, I would say get started with the permitting office as quickly as possible. I've put in multiple calls to try to get some information just for this seminar to give you guys some more points. But they are so busy that they are not responding. I will say that they've suspended permitting for certain things. So if you look on their website, they'll say, well, you don't need to permit for fencing right now. We're waiving the requirement to permit for this or that or the other thing. Minor things, but still helpful because normally you can't do that without a permit. So they're allowing you to do that.
That's good information. And I also just want to share, Amy is referring to another webinar that we are currently working on that will include a panel. And the panel discussion will include land use, our real property attorney. We're also looking at a builder, a local bank to talk about construction loans. So that, as I mentioned at the beginning of this webinar, will be called Raise, Rebuild, or Run. And you'll see that coming up shortly. Okay, next question. Is wind-driven rain coming in from a door or window that causes water damage covered by flood insurance or homeowners insurance? Which
that should be covered by homeowners insurance. And so the carrier is going to say to you, well, listen, the door wasn't compromised. The window wasn't compromised. It didn't break. And actually what has happened, and you may need to get an engineer to support your position on this, is that yes, that has been compromised. It didn't break, but in the case of a window or sliding glass doors, you have the seal. So normally you have a seal there. So when it rains, water doesn't come in, right? That's not a normal event. However, when you have a hurricane force winds blowing on that, it cracks those seals and water comes in. And so that is not flood damage, that is wind damage. But you're going to have to fight for that because they're going to say, we don't see a big crack in the window that caused this water to get in.
Yeah. Can you explain how the value of a building will be determined for purposes of the 50% rule?
Yeah, so the value of the building is supposed to be it's supposed to be the replacement cost value, the value to rebuild the structure as it stood the day before the loss. There is language that says it's the fair market value. One of the problems we have is they're supposed to be looking at the property appraiser's website. The property appraiser, I know for St. Pete Beach at least, I think for Pinellas County, sorry, the Pinellas County property appraiser is not necessarily distinguishing the value of your structure versus the value of the parcel of land for fair market value purposes. So it should be determined by that. Again, if you don't want to hit that 50%, you would be looking at the appraised value and you're like, well, look, the property appraiser's website says my house is worth X. The fair market value of it is X, but that's really the entire parcel. So if you wanted to stay away from that 50%, you would want that higher number. If you want to get closer to that 50% so you can raise up and get that $30,000, then you want to say, listen, that's for the fair market value of everything. My house alone is only worth this kind of thing. And you can challenge those.
And you can
but
find
also just Yeah, and again, we're going to into this a little bit further. The 50% damage isn't just the flood damage that you see today. They're going to do a look back and say you can't do more than 50% of repairs to your home within a certain period of time without bringing the entire thing up to code. And just the genesis of that was people would say, okay, well, I'm going to do my roof this year and not hit 50%. The next year, I'm going to do this. So next year, I'm going to do that. And the municipalities got kind of wise to that. They said, listen, we're going to do a 5-year look back. You can't renovate your entire house year after year. If you hit that 50%, you have to bring everything up to code.
Mhm. And Amy, just to remind everyone, I know with Pinellas County, you can find that letter on the Pinellas County. If you put in your, obviously your home address, you can find that FEMA letter that will state what they are looking at and what they consider to be your 50%. So if you want to, if anyone hasn't looked that up, I encourage you to go straight to the Pinellas County appraiser website. And again, there's a little drop down where it says WLC FEMA / WLM. Is that right? And you open up the letter and it'll tell you what your 50% is. Okay, next question. For flood, it sounds like we should get a private appraisal right off the bat in order to get a good initial adjustment. Question mark. And I'm going to ask, I'm assuming it was sent to me privately. I'm assuming they mean when they say private appraisal in terms of the repairs. I'm assuming either appraisal with the repairs.
Yeah.
I could, for example, I could share, go ahead, Amy.
Yeah, let me address that. The term appraisal is not adjustment or evaluation of the damages. So the term appraisal really relates to evaluation of the building. So the process of appraisal that I described in the policy is where you have two appraisers. I guess that's where you're getting that from, to look at this. But really what you want is an adjuster, either a public adjuster, right? Or get your own estimates from remediation contractor and the specials and your contractor. So yes, in order to get a fair adjustment of your flood claim, you need somebody analyzing the damage for you.
Okay. And I'm going to just share on a personal note. I did flood last September during the Dahlia. And, I learned so much, obviously, during that process. And by no means am I an expert, but I took many notes. But, I found it interesting that I ended up meeting with 15 contractors. This was during a Dahlia, so I could do that. So I was quickly meeting with 15 contractors to get pricing. And I will say one thing I thought was really great was my adjuster who came from, we had private flood insurance. Of course, the adjusters they send, as you've all have probably learned, are from outside the area when they consider it to be Cat 3. When we say Cat 3, not this level of the hurricane, but Cat 3 in terms of the toxicity. And that outside adjuster said to me, when you start meeting with, looking to do the rebuild and you're meeting with contractors, he said, I advise you, don't go with the most expensive, don't go with the least expensive, find a good person who's going to do good work. And he was right. After meeting with 15 different contractors, some are going to come in very high. And I think that can scare you because then when you do get when the adjuster sends you their proof of loss, and as Amy said, when they send that, it is detailed, it's line by line by line, and it's going to give you this full amount. And you may see, okay, they're giving me 150,000, but you've just met with a contractor who's telling you obviously it's going to be 200,000. That does not mean that you can take that back necessarily. And Amy, I'd ask you to clarify that. But that doesn't mean that you can take that contractor who came in very high and take it back to your adjuster and say, well, this is coming in higher. It doesn't quite work that way because, as she said, they're going through line by line and they are using their formula to do that. And then you can obviously find a contractor who may come in lower, and they will. So that's a tough part of the process of finding somebody you trust to do that rebuild if that's what you're doing.
Now, I'm a fan too in that situation of trying to have the tradesman talk to the FEMA adjuster. Say, hey, listen, can you guys get on the phone together? Would you get on the phone with him and explain why this is what it is? And if you have a decent adjuster, they are looking, and right now the flood adjusters are inundated. So I think we're going to see a little bit of a different tune than we've seen in the past, where it was just go out and try to scrimp as much. I feel like their marching orders are going to be more, if there's a basis to pay it kind of thing. And so what you want to do is give them a basis to pay that. And the basis to pay it would be the contractor's real world. And, it's kind of a rule of three. If you have three estimates that are around the same amount for this item, that's a fair sampling.
Yes, exactly. Okay, next question. How long should you wait after the adjuster comes before you get concerned about the company paying, not paying?
Yeah. So if it's FEMA, you're in for a fair wait. I would say, in my experience, squeaky wheel gets the oil. And we had our own personal flood claims last year and this year, and I'm helping other family members with those as well. So just I email regularly every couple of days, just following up. Where are we? What's going on? Type of thing. I wasn't doing that during Milton, of course, because he had just, but squeaky wheel gets the oil, and time is of the essence. You have hard deadlines to submit what you think your whole claim is. And frankly, if FEMA pays you a certain amount of money and you can get workers to do that with that money, you're golden. You're done. You don't need to scramble and try to meet this proof of loss deadline. So the sooner you know whether you've got a dispute on your hands, the better. And that starts with getting their estimate. You could preemptively get your own estimate, but that does cost money. So, it's kind of a juggling game. Don't let that proof of loss deadline go, though. So, and contractors can always write an estimate on the dime. You can't call them today and get an estimate tomorrow, kind of thing.
Exactly.
Can I say one more thing?
Yeah.
If you are not insured, FEMA has coverage for certain things. So there is a website for FEMA to go in for the uninsured. And frankly, sometimes I've seen that I feel like the uninsured are getting somewhat better benefits sometimes than those who were insured. But that's just a function of adjusting. So, but wanted to say that.
Mhm. Also, Amy.
Yeah, when she's saying follow up with every few days, with whom? With the adjuster that is doing your adjustment. So you should have their email, get their email and their phone number at the very beginning. And then if you're not getting any response, you can escalate that up to the insurance company. Often that's not that simple. There aren't that many ways to do that, et cetera. So.
Yeah. Sometimes you have an internal adjuster and the outside adjuster, and your outside adjuster is the adjuster who came to your home, and then you're contacting the outside adjuster. But the internal adjuster as well, I know when I'm sending communication, I am also copying the internal adjuster as well to keep everybody on the same page.
Right. So that's called a desk adjuster, and then the outside adjuster is called the field adjuster.
Correct. And one other quick thing, when they're asking how long until, Amy, you want to touch on, you do have, obviously with flood, again, in particular, you have your advance payment. You should get a letter that states what the advance is. Yes, you receive that letter, and then of course the advance should be coming within a somewhat timely manner after that, but then you get their proof of loss. And Amy, when you're referring to proof of loss, I have a question really quickly about that to clarify for everyone. That proof of loss, the flood insurance also is going to send back to you what they call the proof of loss, which is the overview of what their line by line their payment is going to be. And at that point, you're either agreeing and saying, yes, I agree with that. And then that starts the process of them sending the payment to you and your mortgage company, or you're not agreeing with it, which you've already reviewed, your steps you can take with that.
Well, I no, that's not quite fully correct. They owe you the undisputed amount, even if you don't agree with that payment. They have to tender that and pay that.
Right.
So they're going to send you a proof of loss with their estimate, and they're going to say, sign this proof of loss. And you're going to say, wait a minute, I don't agree that that's all of my damage. And of course, as attorneys, we're like, I'm not going to sign anything if I don't agree with it. So you can put in there, this is for undisputed amounts only. It's a weird thing that they make you sign something to get what they think is due. And so in the FEMA flood context, you can do successive proofs of loss. So your first one again, people are going to come to you and they're going to say, oh, I already did my proof of loss. That deadline's met. Well, they did a proof of loss with what the insurance company thought was due. They didn't do one for the disputed amount, for what they now think their claim is. And that's the deadline that really matters. And in fact, often there is a suspension of the proof of loss requirement for initial payments in catastrophic events like this. So they might not even make you sign a proof of loss to begin with. That's confusion too. People are like, oh no, I didn't have to do a proof of loss. My adjuster told me I didn't have to. Well, you didn't have to do one to get your undisputed amount, but if you're challenging that, you do need to do one.
Mhm. Perfect. And then a private question sent to me was, if you sell, and this is probably gonna come up in our next webinar as well, but if you sell your house after the loss, are you still entitled to the proceeds from FEMA?
That's a great question. So yes, you are. So I just want to say that I didn't talk about valuation ACV versus RCV. There are two different types of valuation. One is replacement cost value and one is actual cash value. And the difference between the two is depreciation. So replacement is the cost to replace your 10-year-old TV, buy a new one today. The actual cash value is the value of the 10-year-old TV as it stood the day before the loss. And again, the difference is depreciation. In the FEMA context, a lot of times the policies are only ACV. So you're only getting actual cash value. You're never getting replacement cost value. But if it is a replacement cost value policy, and this applies to wind as well, they pay you the actual cash value first. And then after you do repairs, you get that depreciation, which equals your replacement cost value. So if you sell your house, if you take your ACV and you sell your house, you will be depriving yourself of that depreciation. And that's about it. But you still, your right to the claim is vested at the time of the loss. Does that make any sense? So you can't incur things like your increased cost of construction. Often people will, when they do these, if they want to sell, they may assign their benefits to a purchaser who could recover that depreciation, because the purchaser is the only one who could actually recover it if they do repairs. So
Okay, so let me follow up with that. So question, so if somebody receives their funds from the insurance company and it's made out to their mortgage company, as we've talked about as well, and now the mortgage is holding that. So for example, they're holding 200,000 and you sell your house at that time. Could you speak to that? Like just kind of walk us through.
sure, the mortgage company will apply that to your loan.
Yes.
So those are funds that would no longer be used to repair. They would be to balance the equities in the collateral. They're saying, oh, your home is $200,000 repaired or damaged, then we're gonna take $200,000 off of your loan and kind of make ourselves okay.
Mhm.
There was a day where they would do that too. They would say, hey, listen, you've got so much equity in your home that we're just going to give you this money to do repairs or not do repairs. We're not going to require them. Now, mortgage companies, by and large, do not want to apply funds to a loan unless they're going to pay the entire thing off. So you just have them hold those. Does that make sense? So unless you have enough funds from your insurance to pay off the entire loan, they're going to want you to repair the property. So if you're selling your home, you can just have them hold on to those funds in that escrow. It should be an interest-bearing escrow.
Mhm.
And then when you sell your house, those funds get applied, plus the purchase money, and the overage goes to you.
If my damages look to be less than my deductible, should I still make a claim, or is it more beneficial to not make a claim?
That's a great question. I think you need to be certain that your damages are going to be under deductible before you make a claim. Certainly, when you do your renewal, you should disclose that you had damage from a covered event that wasn't reported. So for the rule of completeness, I think making a claim is not a bad idea. And just say, I don't even think anybody needs to come out, but at least they're on notice of that. What we run into in situations with litigation is you've got a claim 4 years later and they're like, well, you had you had damage from Irma that you never reported to us. And it's like, well, my fence was down. I just put it back up. And that becomes now a misrepresentation on the application. You didn't tell them, et cetera. So with insurance companies, and I'm sure there are folks on here who do defense work and probably work for insurance companies. And I'm not trying to disparage them. It's just my experience in litigating against them is that they do a lot of post-loss underwriting and look for a misrep in the application. They look for anything like that. So I'm always a fan of full disclosure with the insurance companies.
Good advice. Can you help us understand the determination of 50% more clearly? If insurance is paying out more than the amount that Pinellas County determines to be your 50%, is that determinative of a substantial improvement to your structure? If the city issues a permit under the 50%, are you protected? It is hard to understand who makes this clear determination.
Yeah, that's a very complicated question. I don't understand if you're saying that the city did not do a notice of substantial damage determination to you or issued a permit to you without requiring full code compliance. That's inconsistent. So the way that it should go, this 50% is that if the property is over 50%, again, there's play in the number that we're basing the 50% of, and that makes up the 50%. And so if you meet that threshold, that number, then your entire structure should have to be brought up to code. What does that mean? That means I had old wiring, or I had a roof that was not hurricane. I have a structure that has been grandfathered in over time. And that's the way we rebuild things, right? If I'm doing a renovation to my bathroom, I have to use current wiring, but I don't have to go rewire my whole house. If you trigger work that's over a certain amount, you have to bring your whole house up to code, everything, right? And so the biggest piece of that, where FEMA comes in, if you want to think of it like a federal code, is that you have to elevate these structures, which essentially requires that you demolish the structure, which results in a total loss and a total rebuild. So I don't understand how the permitting authority would issue a permit to do partial work without making sure that what the work that you're doing is going to bring your entire structure up to code. And maybe you're already kind of code compliant. Maybe you have new windows. Maybe you have that stuff. But those are the overall aims of the 50%. And then again, it's 25% if you've been flooded more than once. I saw someone popped a question up about the cost of a public adjuster. It's 10% for a storm.
Right. Another private question sent was, do you handle all of these claims under a contingency fee agreement, and typically what percentages? Additionally, does that differ if an insured already has an amount of damages the carrier determined versus you coming on board at the inception of the claim?
So that's a great question. We do this work on a contingency, and typically I would charge a third. All things being equal, it's typically a third. Sometimes I go down to a pre-suit amount depending on the circumstances. If it's a denied claim, there's no sense in dealing with a pre-suit amount. If this is a flood claim, I would probably look at doing a pre-suit amount. It depends on the circumstances, how much has been paid, how much is in dispute. What do I think? What are the coverage defenses that are being raised? But we do work on a contingency and we front the costs. And, I'm happy to look at any and all cases. I handle cases up to, $10 million large condo losses in Fort Myers, down to we had some folks with mobile homes that have a $10,000 roof. So the philosophy of our firm is typically if we can help people, we do, and we try to. It used to be that the insured could get their fees and costs covered. If we won the litigation, that's been eradicated. And that's unfortunate because it is harder to take a smaller claim. But we still do, and I do a PFS in the litigation as soon as I can, that type of, always trying to navigate the new statutes. So
I'm coming back to the 50%, which I think this has already been answered. So is the 50% rule lowered to 25% for Milton for those flooded in both Helene and Milton? So basically those two back to back.
yeah, under the federal guidelines, which typically they don't change, it would apply. So you may want to consider that. That's a good point in whether or not you make a Milton claim. You know, do you want to hit that 25% or not? You know, we have cottages out at Pass the Grill and a house on pilings. Our one cottage was damaged last year. We spent $35,000 doing work on it. It's now damaged again. We are calling it a total loss. I'm glad for the 25%. That thing needs to be on pilings. It's just going to continue to get damaged. So I want to be in that 25%. If you don't want to be in that, you know, you could do some other things.
Okay. And then I'm going to skip over because there's some that we've already, I think, covered about the homeowner can sell and the proceeds, where they go. We've talked about that. There's also the 50% and the 25% rules might apply even if a homeowner does not make a claim. That's the question.
Yeah, so the FEMA guidelines would apply, right? These are building code requirements. So the question would be, how much is the work? Typically, they're going to look at the insurance company's adjustment to figure out how much the work is. That's another thing. You know, if you want to have be under the 50%, using the insurance company's estimate is usually good because it's going to be lower than probably the real cost is, right? As far as looking at numbers. So even if you don't make a claim, the building authorities are going to require a certain amount of compliance. And I just, you know, with all candor, I do not do construction defect work. I don't pull permits. I don't, you know, this is in my purview only because I counsel folks in how do we want to arrange this? What are your end all goals? Do you want to demolish this place and build up or what have you? There's also a valued policy law that applies if it's wind damaged to a certain amount, et cetera. I saw somebody ask another question there that popped up, but I can't remember what it was now. So I'm sorry.
Well, one head is the typical cost of a public adjuster, which you answered. And another
Yeah.
one said is the 30K for raising house part of the total 250K
Yeah.
or in addition to 350K or 250K.
Yeah. Thank you. That was the one I wanted to answer.
Yeah.
Great question. It is in addition to your policy coverage, and the ordinance and law under your wind policy, by the way, or your homeowner's policy is also in addition to.
Mhm. Okay. How do we know if we're going to get this letter from FEMA? Are you, and that question was to me privately. I'm assuming is that, are we referring to the letter regarding the 50%?
Of notice of substantial
There's
damage
substantial-
determination. Yeah. So that should be determined before your adjustment, because that goes into your adjustment, right? If you are going to have to raise the building up, it's going to be a different adjustment than if you don't have to. So I think what they're doing, and again, I'm sorry I don't have all of this information about how they're notifying. I tried to reach out to the local, nobody's calling me back. And I think they're just trying to scramble to do it. I think they're putting these things on your property notice. But your FEMA adjuster, like my FEMA adjuster said, I've already called the building department. They already know about this loss, and I'm trying to get some things figured out. So I'm waiting for him to get back to me with what have you. But I could easily look on the website. I can't easily call the city. They're not answering. They're not, you know, and I have no idea as a practical matter how they're going to go out and do these substantial damage determinations. In other places, they've driven around. They're like, that one's substantially damaged. That one's, you know, we're condemning this, all this stuff. I don't see St. Pete or St. Pete Beach as being as proactive as that, but I think they're just inundated. So how they're going to handle that is a function of the local municipalities.
Mm-hmm. Okay, if Helene flood damaged drywall, then city bored out drainage pipes on Venetian Isle negligently, which contributed to several adjacent seawalls to collapse during Milton. Is the seawall damage going to trigger a 25% issue if no new flood damage to the home itself?
Yeah, so the 25% should not apply to things that are not covered, like the seawall. So your detached structures. In fact, I had somebody texting me almost that same question about a detached garage that flooded before, et cetera. Um, but I do want to say something about the city stuff because w- w- yeah, we've been contacted by a lot of folks who are like, oh, well, the well pump station or this or that. And we've taken on some of those. Suing a municipality for their negligent handling of stuff is very, very difficult. I have done it. And even where it was a city driver that was drunk and smashed into my client's home, it was difficult. So there has to be gross negligence, and that's a pretty high standard. They're immune from a lot of things. So your insurance company should cover you for that type of thing, right? If that piece is covered and your seawall is not covered, right? So that's unfortunate. But your insurance company should then and can subrogate to the city if they think the city did something that caused this damage to your property.
Okay. And then we just had a comment. Well, we've had, first of all, I just had several comments. Everybody saying thank you. What a great job. And I wanted to share, we are at the 1:30, but Amy has agreed to stay on longer. So if there are more questions, I don't want people to feel they have to stop entering questions into the chat. But as we continue and I continue to read some of the comments, I do just want to say that to you, Amy. I'm hoping you're seeing that everybody was, I told you, I started this webinar letting everybody know that you're a rock star. And now they believe me. Now they know, they've seen the magic. But we have a comment again, so many comments, which I appreciate everybody saying thank you. Somebody just mentioned best practice might be to send a letter to your insurer, even if you don't make a claim, explaining what was fixed.
Yeah.
Document it so you don't get denied later. It would, help with later selling and sellers disclosures. So I think
Yeah, that's a great tick. I see Jim Thaler commented. He's an old buddy from law school. Hi, Jim.
Yes, and then as far as getting the recording, I will say this, we do send out the recording via Dropbox if you request it, if you specifically request it. I will say with 192 people registered, sending it out to 192 people via Dropbox takes a moment. So I just ask if you would like a copy of the recording, please go ahead and email us, and we will send out the cheat sheet following this. And again, I hope you're still reading. Oh, really quickly, a pool pump is not covered under flood, correct? That's a question someone asked.
Probably not. Yeah. So I did want to mention something about contents under flood, though. Although detached structures are not covered, contents that are stored in those are covered, right? So if your pool pump probably is attached and not going to be covered, but maybe some of the other pool equipment would be covered.
That's great. That's a great distinction. Okay. So again, I just see everyone once again just saying what I have said over and over. I can't thank you enough, Amy. You're phenomenal, and we're so happy to have you, and so happy for you and your time that you've given, and just this wealth of information. And it's who you are. I just want people to know that it's who you are at your core. But again, thank you so much.
Yeah, well, I'm really happy to help in this. I've dealt with a lot of communities over the years that have been hit with hurricanes, and when this all happened, we evacuated. We're at our farm in Kentucky, and I had friends who were, we're doing a water bottle give out. We're doing all this stuff. And I was like, I feel like I should be there, digging sand out of Passagrille. And then I realized kind of my talents, what can I give back? And that's this information, thing. I'm going to be doing some of these Facebook Live for the beach folks, because this is complicated. And I know as attorneys, people think that we know all this stuff, well, hey, can you talk to me? And you can't dabble in this. And it's hard to even just give off the cuff advice because it's so far out of the norm, especially with the flood. If it were wind, you could just read the policy, you'd be okay. Flood, there are all these other rules that come into play that you have to go to the Code of Federal Regulations and all these places to even piece together what you're supposed to do, so.
There's also another question. I would just want to touch on it because I think it is important. Someone said, are there about to be tens of thousands of people about to go bankrupt? because of the 50% and 25% rule. And I just want to, I'm going to, of course, Amy and her expertise comment on that. But I will share that, you know, again, kind of right out of the gate, I'm so thankful for those in our leadership because, again, Amy stepping forward, as well as a few other attorneys within our leadership that we're putting together that I reached out to last week, you know, right after Milton to say, hey, can we do this webinar about raise, you know, rebuild, run, because that is what we're all feeling. You know, everybody's feeling that fear and trying to, you know, keep their emotions in check as you make these educated decisions. But to Amy's point that she just made, it is very fluid. And what I'm finding as I'm trying to put together this group to talk about raise or rebuild or run is even as trying to get a builder. I've talked to several builders who don't want to come on the webinar because they're so concerned about what they say because things are moving so quickly. But I will share last night I spoke to a builder and I tell you, I went home at the end of the night a little depressed because it was very depressing, his doom, a little bit of a doom gloom outlook on what this may mean based upon this 50% and the 25% rules. So yes, I think that's a valid question. And again, I think that's the fear that people right now are starting to grapple with of what is this going to look like in terms of developers, in terms of, you know, the 50% and the 25% rule. So, I mean, do you want to speak to that? Do you think there are tens of thousands of people about to go bankrupt? Big question.
Sure. Yeah. Sorry for the barking dogs here. So yeah, this is a problem. I did a news spot last week, was asked to comment, and it's a national news thing. And the very first question was about, are we about to see a mass exodus out of Florida? The influx that happened during the pandemic is going to happen. And I think what we're more looking at is perhaps a mortgage foreclosure crisis, not so much bankruptcy. And it will be interesting to see how the city and the municipalities respond to this. They could make it easier and bend some rules. They can't bend that FEMA rule, but they could do a 1-year look back, for example, instead of a 5-year look back. My hunch, and I'm sorry to say this, is sometimes they are not adverse to developers coming in and recasting the entire area in brand new things that are up to code, et cetera, et cetera. Although there is a nice charm for these homes that have been around since the 1920s or the 50s, they are somewhat problematic sometimes. So what I see, and I think, again, this other webinar is probably going to address some, is what are banks willing to do? This is a good time for them to step in. These properties are valuable. So do I see bankruptcy? No. I mean, if you have a plot of land, you know, real estate is still valuable in Florida. And so you can sell it and, you know, make yourself whole and maybe then some, and someone else comes in and builds on it and builds something different. And what it does, unfortunately, is change the character of the area.
Yes, and I think that's the concern as well, because I think there is a concern, obviously, with developers, and then are they going to get pennies on the dollar? And, you know, what does that mean, you know, because they know everybody is in a situation regarding the 50% and the 25% rule.
Right.
Yeah. There's another.
You know, I'll just say I've been litigating for 24 years, and I've dealt with these communities, Cape Coral, Mexico Beach, Panama City. And I've told my clients, you know, well, your community will be built back, and it will be built back better. And until this happened, I didn't realize how ridiculous that sounded and how I, you know, knew nothing, Jon Snow, because honestly, they didn't want this rebuilt. They liked their place the way that it was. They want their church that they've gone to for years, their crab shack that they've been celebrating important events at for years. I'm getting teary-eyed, I'm sorry, but you know, that is going to be a challenge. And I think city leadership will have to make some decisions about what they want the city and the surroundings to look like.
Another quick question. I just wanted to, someone asked, do you have any guidance for a 2-story structure where the 3-foot a flood-caused structure and contents damage to the first floor in a post-firm elevated building. Adjusters seem to believe it would be limited to certain rather minor fixtures in the SFLP.
Yeah, so anything above the first, that downstairs is probably not going to be covered. Right? So it's, we had this. So I have an elevated structure in Paso Grill. And so the flood water came up just under our house. We've got our floors are warping and all of the duct work, everything that was under the house was damaged. And we're getting if you have something on pilings, get an engineer to look at those pilings. You really need to do that. Even if you have to wait to get that done, it's an important check.
Mhm, mhm. Yeah, of course,
So-
others are commenting Shore Acres is going to change drastically, which we're here. Yes, we hear about that. And then I love, thank you, Oxalis. She said it will be better.
Yeah.
And then John Stokes, again, thank you so very much, Amy. Incredible webinar, timely and so very informative. Kudos to you, Melissa, for one of the best webinars. Kudos to her.
Thank you.
Everyone, thank you for all of the information. Again, I don't know, I'm assuming we're at 1:42. If there aren't any pressing questions left, again, I don't want to rush anyone. I don't want anyone to feel hesitant. This is the time. If you have the question, this is the time. Go ahead and throw it up there.
Yeah. While we're waiting for that, I'll just again say, I'm open to pick my brain about stuff. I'm happy to talk to folks. We all obviously also take referrals and have handled a lot of things for local attorneys and their clients, and even for the attorneys themselves that are just like, I don't want to deal with this, it's too much to deal with. So we're happy to contribute in any way possible. Yeah.
Oh, Christina.
Condo owners, yeah.
Yeah.
Condo owners are going to have issues because their condo association has to do typically the rebuild and the work that they're going to do before you can get your work done. So the condominium association owner owns basically from the paint in. And by even just virtue of that being the limitation of the ownership, you don't even have the authority to rip out the drywall. Although a lot of the associations will allow you to do that, but that's really association property, and they've got to get their claim adjusted and through before you can do your repairs in your unit. That's the unfortunate piece for unit owners.
Is there an elevated building? FEMA says they only cover level 2 and above. What about a ground floor garage?
Yeah. So, is that Lisa Baird? Laura Baird? Yeah. You can call me. So I've dealt with this pre-firm, post-firm, and what's above and below. I don't have that rule just on me this second, but there is a rule that deals with that. And what I know, I can't cite it to you, is the upshot is that they're not covering anything that's below that below that if your building was built in a certain year. And so that's the rule. I don't know where it's from. I need to get that for you if you want to contact me.
Okay.
So again, the FEMA policy is the FEMA policy plus a series of regulations that come and apply. And so they did this pre-firm, post-firm thing back in the day at one point, and then kind of divided coverage based on that.
And then another comment, many properties don't have mortgages, especially obviously older people, maybe 70% on the beaches without flood and homeowners. Are they going to be in trouble?
Yeah, they probably will be. Again, they can apply to FEMA and see if they can get something, only if it's their primary residence, though. If it's not their primary residence, that's going to be a problem. How they do repairs and whether they have to elevate really depends on what the code enforcement is going to require and what type of work they do. For example, if you have a remediation contractor come out and just dry the place out, that's not even a permit. The building department doesn't even know that that's happened. It's when you get into the rebuild. And I don't know the code about whether you have to have pull a permit to put up drywall? I think you do. Again, I don't know that for sure. Typically, we have estimates that are encompassing a lot more than that. So could you get away with doing some repairs that wouldn't trigger code? Yeah, again, I would go on their website and see what can be done. And my understanding, I wasn't able to talk with anyone at the department, is that some of those things are suspending permit requirements temporarily. So that might be a good time to shove in and get your stuff done before they require the permit. And you have to report that you did $40,000 worth of work there or something.
Exactly. I think it depends on the amount of drywall. I think that's when it starts to trigger. Like if you're at those low cuts, 2 foot, 4 foot, I think that's when it gets a little dicey.
It's there are a lot of rules, and I think they're going to be like the contractor said, they're going to be fluid. And I believe, I mean, I don't know, again, I keep going back to Mexico Beach, but Mexico Beach was an area that was completely devastated, and it was a small municipality, and they just suspended. They said, we're not doing any building permits for 4 months, and we're going to figure out what our new codes are, and then we're going to do that. And they just held everybody in abeyance while they figured out what their code should be. So I don't expect that here. Obviously, we're a much more sophisticated community, but there will be a full evaluation of what they want to do going forward, and they'll shape those codes, with that.
Yeah, that's a great point. That's an interesting comparison.
Yeah.
Okay.
Yeah, it depends on the municipality. I've got a friend chiming in that the municipality and what each city and code requires for permitting. Again, this is kind of going to be piece by piece. I have a colleague, Ben Berkowitz at my office, who's reminding me too that sunken rooms are supposed to be treated as basements and not covered under FEMA. Although I successfully challenged that with our one cottage last year. So, because they wrote it for the entire thing. They didn't limit my square footage to the unsunken room. Yeah, the guy walked in, it's a step down, not even a full step. The guy's like, that's a basement. I'm like, really? It looks like a living room to me. I don't know, but so,
I love
anyway.
it. I love it. Okay, well, with that being said, I think we're coming right up to the 145, 148. And again, I sound like a broken record, but I'll say it on behalf of everyone here today. Thank you, Amy. You are fantastic. And this is just incredible information. And I'm so thankful that we as St. Pete Bar could be a part of your journey and sharing this information. So thank you for doing this for us today. And thank you to everyone who has joined this call and this webinar. And again, keep checking the calendar. We're going to have more coming, more information coming. And as Amy said, she's with Boggs Law Group. So you are welcome to reach out to her as well. And I'll just tell everybody once again, take care of yourselves. It's overwhelming. It's exhausting. So step by step, we'll all get through it. Okay.
Thank you.
Thank you,
Take
everyone.
care.
Take care.